All right. Welcome, guys. So I feel like we're about to dive into an IMAX movie, and every time I go through that countdown timer, it just excites me and it makes me smile. Hopefully, it does the same for you. So I'm excited to dive in today. We've got a awesome presentation to dive into with a lot of great research, a lot of great data points, a lot of great excitement too around what this can do for the right person. So this could be an incredible, powerful opportunity for you if you're an active investor and you're looking for something to invest into that has short-term and long-term ramifications. And everything is right now going towards AI being a part of everything we do in business. And e-commerce is really leading the way with that. And I'm blessed to say that I am in e-commerce and have been for almost 13 years. So let's go ahead. Let's dive in today, guys. But before we do, for those that are joining me here live, let me know that you can hear me good, that I'm coming in loud and clear, and that the picture is also good as well. So just let me know. Give me a thumbs up in the chat. Just say anything in the chat. This way I can know that the experience is coming in the way we intended it to come in. So let me know in the chat. And let me see if I can change something real quick, because it looks like there's a visual effect that we don't want. Cool. Yeah, we don't want that. Okay, cool. All right. So I got a thumbs up. Thank you, Tony. Appreciate it. All right. Anybody else? Can you guys all hear me good? And also let me know where you're joining me from as well. In the comments, just let me know what state you're joining me from, or if you're from a different country, let me know if you're joining me from a different country. It'd be great to see where everybody is coming in from on today's live stream. All right. Thank you, Paul. Appreciate it. Thank you. All right. West Palm Beach. Nice. I've heard nothing but good things about that area. There's a reason why a lot of wealthy people go to that area. And also we've got Woodbridge, Virginia. That's a new one. Thank you, Tony. Appreciate it. Cool. All right. A few more guys. We'll wait just like a few more minutes here, because usually people start to jump in a few minutes after. I don't want them to miss any of the presentation for today. So keep chiming in the comments. And also, while we're waiting for people to join, let me know your number one question for today. What is your number one question when it comes to Agentic AI for e-com, or about me, or about my company, ARM5 Formula Company, anything and everything? And at the end of today's webinar, I'm going to go through everybody's questions and address everybody's questions. So let me know in the comments while we wait for people to join. They're coming in late. Shame on you. But let me know what your questions are for today's webinar. Nice. Well, yeah, Paul highly recommends the Palm Beaches. He moved from Boston when Boston's cold compared to Palm Beach. That's for sure. Okay, so Tony's got a question, I think, about costs, right, Tony? Give me a thumbs up if I'm right about that. All right. Okay. All right, I'm gonna go ahead and start sharing my screen. This way everything comes in. So let me know when you can see it. And Tony, thank you for the thumbs up. Appreciate it. Okay. All right, can you guys see my screen, see the presentation? Give me a thumbs up if you can see my presentation. We'll go full screen. All right, awesome. Thank you guys. Appreciate it. All right, well, let's get started, guys. All right, so we're going to dive into ARM5 Formula AI. So the title of today's presentation is How to Gain Early Equity in Agentic AI Built for the $8 trillion e-commerce market. $8 trillion. The e-commerce market is massive, if you didn't know that already. So this is going to be a compelling investment opportunity in the fastest growing segment of enterprise AI in the booming e-commerce industry, which is projected to reach 83.3 trillion. That's right. By 2030 at a CAGR, if you don't know what that is, it's a compound annual growth rate of 18.9%. Most successful industries are typically doing somewhere between 5 to 9% annually. So the fact that e-commerce is on average projected to do an 18.9% says a lot about e-commerce and the boom that e-commerce is, and how that's a growing economy, and that's a place for you to get your hard money to work harder for you as well. Okay, before we dive in today, small investment disclaimer. ARM5 Formula Company is conducting this capital raise under Regulation CF, which is the crowdfunding regulation, and also Regulation D, which allows non-accredited and accredited investors to participate in early stage private company opportunities. Investments in private companies are speculative and involve risk. Past performance is not indicative of future results. There is no guarantee of liquidity, profit, or return on your investment. You should carefully review all offering materials and disclosures before making any investment decision and consult with a licensed financial advisor if needed. Basically, invest at your own caution. My name is Josh Marsden, and I am the owner of ARM5 Formula Company. I'm also a U.S. Army veteran. I served from 2001 to 2005. It was exactly what I needed at that point in my life. It put me on the right path. I also am a MBA graduate. I hold a bachelor's degree in business marketing and also an MBA in general business. I'm an international best-selling author. I published 2 books in e-commerce. One was an international bestseller in 11 countries on day one back in July 2020. I've had 18 e-commerce business acquisitions since 2022. We're about to close number 19 here in the next week as well. I've impacted thousands of e-com businesses since 2013 through online events, coaching, and also client services. And I've had just over 100 million in online sales, maybe more, but at least 100 million in online sales just through all the various efforts and all the services that I've provided since 2013. And I've been seen or heard on Forbes, local media outlets around the United States, Superfast Business, Big Commerce, and various other media outlets. And I'll tell my story very shortly because I really want to get into the meat and potatoes of today's presentation and really deliver a lot of value, a lot of impact to you. But my story is simply this. Back in early 2013, I had jumped from job to job after leaving a career for 7 years that I was very successful at, but I was looking for the next thing to really sink my teeth into and to excel at, like I did in my corporate career from 2005 to 2012. And early 2013, I started at this B2B sales company, and I was doing B2B sales, and they gave me a hard time right away when I started at that company. And they said that I could not leave at 5 p.m. to go pick up my son from preschool, and he was 3 at the time. And I was asking not to do it every day, but to do it maybe 1 to 3 days a week at most, because I had responsibilities. And I communicated this with them, and they gave me a hard time about it for a few weeks. And then eventually, going into the 3rd weekend, they gave me an ultimatum, and they said, hey, look, you can't come back on Monday unless you can get things figured out with your schedule and get things sorted, because we need you here 7 a.m. to 7 p.m. Monday through Friday, because that's part of our culture. Work hard, play hard. And so that was kind of the kick in the pants that I needed. And so that weekend, I sat down and I had a piece of paper, and I drew up a table with 3 rows and 2 columns. And I basically compared staying at that job, strengths, weaknesses, versus starting up my own company, which I had already started to kind of do like lightly, but it wasn't enough to take care of my bills just yet. But I basically just went over, what that looked like, strengths, weaknesses. And after that, I had nothing to lose. I felt like I had nothing to lose. And I just went all in on starting up my business and starting up an agency. And then since then, my company has become a 2-time Inc. 5000 company. We're number 11 in Arizona as of 2025. And that's just by helping businesses grow and by making smart acquisitions. And we've driven millions in acquired revenue with consistent cash flow and real results, building a multiple 7-figure company. And this is the journey of my company. Now, you just heard the origin, how it just started, this spark that was driven, honestly, purely by the fact that I just wanted to create a life around my son, because my son was very important to me, and he still is. But when he's 3, as you fathers know, and mothers, when your children are young, you don't want to miss any of those moments. And I wasn't willing to miss any of those moments for some job. And so that was really like the origin. But then since then, initially, this is the process we went through from that point until now. So at that point in time, we really focused on being a digital marketing and business automation agency. But then very quickly, I was like, you know what? Like, I love engineering business automation and designing automation and building it out and providing that impact with companies. But I really love getting results for companies, like sales results, because I had been in sales and sales management for the last 15 years up to that point. And so I pivoted and I said, you know what, we're only going to focus on marketing for companies. And then from that point on, we started to really accelerate our reputation. And we became a digital marketer certified partner, one of the top certified partners in the digital marketing community. We really focused on digital advertising and marketing funnels. And then in 2019, after doing that for several years, we started to see like a pattern emerging on when we did XYZ, we saw really good results from digital advertising. So we need to make sure that we're always doing XYZ for every single company. And so we started to standardize and productize our services where for a company to work with us, we had to provide XYZ to get best results. And we also trademarked this process and we called it the ARM5 formula, which stands for authority, reciprocity, monetization, and the 5 profit amplifiers. And we continue to provide service for companies, helping them grow with our ARM5 formula. And then going into 2022, we decided to shift the entire business and make a big business pivot and go from selling services to buying e-com companies and supporting our own e-com companies and not selling any services. So we completely changed the business model. And it was a good move because since then we've become a 2-time Inc. 5000 company. We've had over 1,000% growth since 2021. And we now have a big vision, which you're about to find out. So our big vision here is to become a $1 billion market cap company by 2029. That's our ultimate goal. We want to become one of the biggest, one of the best e-commerce aggregators, and we want to avoid the mistakes that some aggregators have made when they have had success. And luckily, I've been privileged enough to be in some of those rooms with other e-com aggregator owners where I've been able to pick their brain and find out what happens. So this way I can learn from their mistakes. So these are the milestones to get there. So right now we're 100% focused on getting to a $10 million annual run rate. And we're right now on track to do that by January 31st next year. And then after that, we'll then continue to acquire companies that are typically between 2 million to 10 million EBITDA, which if you're not familiar with that term, it's close to net profit. Most people, know what profit is. So we're going to target 1 to 2 companies every quarter, buy 1 to 2 companies, bring them into the portfolio. This way we can keep stacking that revenue. And then we want to drive to 100 million in annual revenue by the end of next year, which I'm very confident we can achieve, especially because of the fact that we're working on taking my company public. And then, of course, after that, we're just going to continue to drive, continue to grow our companies, continue to acquire 1 to 2 companies at minimum every quarter and get to that $1 billion market cap goal by 2029. And so, as I mentioned, we've got a big goal to get on the NASDAQ in 2026. We've been working on this since about August of last year. We actually came very, very close to being on the NASDAQ literally in the last 30, 60 days. Earlier this year, we had a deal where we were going to merge with another company that really needed us in order to accomplish their goals. And we could accomplish our goals with them as well. And so it seemed like a great fit. Unfortunately, it didn't work out, but you know what? Everything happens for a reason. And we'll be able to deliver a bigger ROI by doing a direct listing. So like I said, everything happens for a reason. So these are the things that we're doing right now to set ourselves up to go public. We're targeting by July 1st next year. So we signed a strategic partnership with Direct IPO in January this year, which they're now helping us take our company public to the NASDAQ. We're also completing key acquisitions. We're about to finalize an acquisition of InfraReady, which is a booming red light therapy brand that's a worldwide red light therapy brand. And we're also looking to acquire one more company by the end of the year to replace one that we were super close to acquiring. And then we also want to launch ARM5 Formula AI, which is what we're going to talk about quite a bit today. And you'll have a big opportunity to be a part of this as well. We've already chosen our tech partner. We've already completed the blueprint, and we already have a plan to execute on over the next several months and beyond for ARM5 Formula AI. And then, we're going to take all of our businesses, including ARM5 Formula AI, roll it all up, and then register it on the NASDAQ and go public. And based on the research that I've done, I estimate that the valuation could be in between 80 million to 120 million, might even be more than that based on some reports, but let's just say 80 million to 120 million is our target range that we're shooting for when we get on the NASDAQ in the middle of next year. So before we dive in, a few things I just want to point out, because this is something that I'm very motivated to communicate with everybody that I connect with, everybody I provide value to. So this is, in my opinion, why the ultra wealthy, they keep private equity quiet. Now, if you're not familiar with what private equity is, it's investing in companies when they're private before they go public. And typically, we don't get exposed to those opportunities. Those opportunities only come if you're friends with the right people, you're in the right rooms. But I'm on a mission to kind of bring this downstream a bit in my own way. With opportunities like this, with my podcast that I'm launching next month, and also some other efforts I have planned in the future as well. So this way I can help as many people as possible build wealth and live their best life. And this is what they teach you. The world teaches you to get a good job, save 10 to 15% of your income, max out your 401k, invest in stocks in your own home, hope for 7% annual returns, retire at 65, maybe. But what they actually do, what the wealthy do, is they invest long-term in top stocks and index funds. They buy real estate as cash flowing assets, not just the home that they live in. As a matter of fact, I've met a lot of very successful, wealthy people that they rent, but they own a bunch of homes. So they don't even necessarily own the home that they live in. And they also become their own banks by leveraging life insurance, following the Rockefellers, the Rockefeller family. My friend Garrett Gunderson published a great book on what would the Rockefellers do. And in this book, he teaches what the Rockefellers did with building layers of life insurance policies. This way they can keep wealth in their family and also be able to create more of it by loaning against life insurance. You should definitely check out that book. Very, very good book. And also they also invest in private passive income generating companies before they scale. They target 20 to 40% or more annual returns, and they create generational wealth, and they retire whenever they choose, which obviously we would all love to do that, right? So the wealthy understand a fundamental truth that true wealth comes from owning pieces of valuable businesses, not from trading time for money, which is basically the rat race. And they invest in private equity opportunities exactly like this one that you're about to get exposed to before companies go public and capture the most significant appreciation. And so the myth of traditional retirement investing. So for decades, we've been told that stocks and real estate are the safe or the best vehicles for retirement and long-term wealth building. And while the S&P 500 has averaged around 7% per year long-term, there's growing evidence that this performance may not continue with rising inflation, unprecedented monetary policy, and major macroeconomic shifts suggest that future returns may fall well short of past decades. And here's the private equity advantage, all right? The numbers don't lie. This is all based on research. Private equity has consistently outperformed public markets, delivering superior returns to investors who can access these opportunities. For example, since 2000, the average annual return rate for private equity investments has been 11%. Since then, for public markets like stocks, it's been 7.2%. And according to MSCI Private Capital Solutions, private equity investments deliver an average premium of approximately 4.86% annually over public market alternatives. And this premium compounds significantly over time. So consider this, for example, 100,000 invested in private equity in 2000 would have grown to approximately 1.99 million compared to just 660,000 in public markets. That's a difference of 1.33 million, or more than triple the returns, simply by accessing the private markets that the ultra wealthy have been using for decades. And here's also why the mega rich prefer private ownership. Okay, I'm going to highlight Warren Buffett here. So he has this quote. He says, "Be fearful when others are greedy, and greedy when others are fearful." And Buffett's advantage comes from permanent capital, allowing him to practice counter-cyclical investing, buying valuable assets during market downturns when others are forced to sell. And around 40% of family offices now include private equity as a core asset in their investment strategies, following the ultra-wealthy playbook. And these sophisticated investors understand that private ownership offers control and influence, direct input into business strategy and operations, superior returns, access to high growth opportunities before public markets, portfolio diversification, which is uncorrelated returns that reduce overall risk. And what that means is that the returns of your private equity investments, there's not outside factors that impact that. Unlike, say, real estate investing, there's outside factors with the Fed, for example, that affects real estate investing and real estate investment returns as well, and whether you can even sell your home, right? And also tax advantages, preferential treatment for long-term capital gains, and then reduced volatility, no daily mark-to-market fluctuations as well. Okay, and that's going to then lead me into talking about agentic AI. This is the most powerful investment of our lifetime right now. And that's true. If you talk to anybody that knows business and knows what's happening with agentic AI and knows where businesses are going, they'll all tell you the same thing. So the closest that we've ever seen, and not in our lifetimes, but before our lifetimes, has been the Industrial Revolution, which is in the early 2000s. But this exceeds that even. Right now, we're in the middle of a transformation. And agentic AI, and just AI in general, but agentic AI really is the leading change of the world as we know it, and the workforce as we know it. And this is the most powerful investment opportunity right now for any of us, okay? And this is why. Autonomous decision making. Digital agents that act independently, make decisions, and perform complex tasks without constant human oversight, transforming how work gets done. Orchestrated coordination. Multiple specialized agents that work together like an orchestra, each handling specific functions while coordinating seamlessly to deliver end-to-end solutions. And embedded intelligence. Agentic AI is fundamental to how businesses will operate as AI becomes woven into every workflow, from sales to support to operations. And we're in the middle of a number of market drivers and explosive growth trends right now. The enterprise shift is really happening right now. And there's a ton of momentum right now behind agentic AI. It's literally unprecedented right now. Forward-thinking organizations are racing to deploy autonomous agents, recognizing them as essential to maintaining competitive advantage. For example, 40% of enterprise apps, we're talking like Salesforce, for example, most people know, Salesforce, are now implementing AI agents into their enterprise software. And they see that by next year, that nearly 30% of the software revenue is going to come from agentic AI agents within the apps that they're building. So it's a lot of companies are adapting AI agents into their software. And then 75% of companies are investing by 2026. That's the expected investment as software applications become smarter and more autonomous. And 93% of leaders see this as a competitive edge. And they say that using and scaling AI agents in their organization within the next 12 months will provide strategic advantage. And 96% of enterprises are expanding usage right now, currently expanding deployment, with 83% of executives viewing investment as essential. Okay. So the bottom line is this: there's a huge ROI advantage in the timing. 88% of executives plan to increase AI budgets because of agentic AI. And early adopters are reporting a higher ROI, 88%, than generative AI. Okay. Now, if you don't know the differences between the two, I'll just take a moment just to explain. So generative AI is when you're using like ChatGPT, for example, or Claude or Gemini. There's a number of others out there. And it's when you prompt it, you ask it for something. You ask it for an image. You ask it for a video. You ask it to write code. You ask it to prepare a document. That's generative AI, but it still takes you every step of the way. Whereas agentic AI is when you have a whole system that is ran by a program, basically, that does every single step in a workflow. And you can have it be completely autonomous, or you can have it where there is some steps where a human comes in, checks the work maybe, gives feedback, and then lets the process continue. And then the process continues to the finish line, for example. But for companies, this allows companies to streamline their operations, reduce their personnel, reduce their costs, become better at performance, because now they have autonomous agentic applications that are running 24/7. And that's why, like I said before, we're in the middle of a transformation within society and the workplace because of agentic AI. That's how powerful agentic AI is. And agentic AI software outperforms traditional investments already. The data is already there. Here in 2025 and going into 2026, you can see some comparisons here in this table that was drawn from a number of research reports that I pulled to create this report. For example, the S&P 500 index funds, they typically get 7 to 10%. Real estate investment trust, they typically do about 6 to 9%. Corporate bonds, 3 to 6%. Cryptocurrency varies. It could be 0, it could be 100% plus. It's very wild. Traditional software companies, 10 to 18%. Agentic AI software like ARM5 Formula AI, 25 to 40% or more. Okay. And the risk level, risk level is moderate compared to the rest. Cryptocurrency is very high. Most of these are moderate, except for corporate bonds, which is low. Liquidity when it comes to this is low, medium, whereas these others are medium to high. Market growth potential. This is the strongest market growth potential investment opportunity out there today, as I've told you. All these others, they kind of vary, as you can see in this table here. And then the time to profitability is short, medium, because we're in the middle of the agentic AI boom versus some of these others. Okay. So the clear winner is really agentic AI software, and particularly innovations like ARM5 Formula AI, which offers the highest potential returns with moderate risk, tapping into the exploding multi-trillion-dollar AI market. And these opportunities provide robust growth potential and a faster path to profitability, making them the premier choice for sophisticated investors in 2025. And the sweet spot, and this is something that is starting to gain a lot of headway due to guys like Tony Robbins, for example. But this is something that isn't common knowledge and isn't a common practice. But again, it's starting to become a little bit more common. The sweet spot is putting about 5 to 15% of your investment portfolio into private equity investments. And right now with agentic AI and where it's at, this is one of the best private equity investments that you can make. And so financial advisors to the ultra wealthy are increasingly advocating for you to allocate 5 to 15% of investable assets to emerging AI technologies. And this strategic allocation not only enhances overall portfolio performance, but also positions investors at the forefront of the transformative AI revolution, tapping into the immense potential of the trillion-dollar AI market. Now, for one, you've got unprecedented returns, especially agentic AI software right now. It offers a unique opportunity for superior returns by capitalizing on the rapid expansion of the trillion-dollar AI market, which is significantly outpacing traditional investment vehicles. You also have an early equity advantage. For example, securing early equity in ARM5 Formula AI provides a strategic advantage, allowing investors to participate in the foundational growth of agentic AI before it becomes mainstream, diversifying portfolios against market fluctuations. You also have strategic positioning. This targeted allocation places investors directly in the high growth segment of agentic AI, offering visibility into a disruptive technology, unlike general market investments where your influence is often passive, and then also future profitability potential. Investing in ARM5 Formula AI offers substantial equity appreciation potential driven by its innovative platform and a faster path to profitability, as highlighted by its projected performance in the evolving AI landscape. And agentic AI is literally exploding going into 2026. It's projected to be a $2.3 trillion global market size by 2030. And as I mentioned before, agentic AI comes down to having a system that has always on operations where AI agents work 24/7 without breaks, instant scaling, they add capabilities without hiring staff, lower labor costs, they reduce expensive human workforce, perfect accuracy, there's no human errors or inconsistencies, faster decision making, they can process data and act in milliseconds, higher productivity, they can handle thousands of tasks simultaneously, better customer experience, instant responses and actions, and also unlimited growth. It allows you as a business owner to scale without physical constraints. And it's a rapidly growing market. Okay, the agentic AI market represents a massive transformative opportunity driven by businesses' urgent need for automation that can actually take actions, not just provide information like generative AI, like ChatGPT, for example. But as you can see, by 2030, it's expected to reach 320 billion. Okay, and right now in 2025, it's projected to reach 28.5 billion. So that just shows you the growth that's ahead for agentic AI. It's a fast-growing market, and also when it comes to e-commerce is an $8.5 trillion market. And 75% of e-commerce businesses plan to implement agentic AI by 2026 to reduce labor costs and improve the customer experience. And on top of that too, the agentic AI software market's compound annual growth rate, or CAGR for short, through 2030 is looking at an 85% annual growth rate, which is just crazy. It's unheard of, okay? Like I said, we're in the middle of a revolution, and it's up to us to take action and to be a part of it. And here's why e-commerce businesses are racing to adopt agentic AI. E-commerce companies are rapidly implementing agentic AI because it solves their biggest operational challenges while dramatically improving profitability. This creates a massive market opportunity for investors. So for one, you've got the labor cost crisis solution. E-commerce businesses face skyrocketing labor costs for customer service, inventory management, and order processing. Agentic AI can handle thousands of customer inquiries simultaneously, manage inventory in real time, and process orders 24/7, replacing expensive human teams while delivering better results. You also have instant scalability without limits. Traditional e-commerce scaling requires hiring more staff, training, and infrastructure. Agentic AI scales instantly during peak seasons like Black Friday or holiday rushes. One AI agent can handle the workload of 50 plus human employees, making rapid growth profitable instead of costly. And then also, it's a competitive advantage, and it's also for survival right now in e-commerce. Early adopters of agentic AI are gaining massive competitive advantages through faster response times, personalized experiences, and lower operational costs. Companies that don't adopt this technology risk being left behind as AI-powered competitors dominate their markets with superior efficiency and pricing. So here's why e-commerce businesses need ARM5 Formula AI. So today's e-commerce businesses, as I mentioned, they face immense pressure to grow faster, cut costs, and stay ahead of competitors using advanced AI. But most, they struggle to piece together fragmented, disconnected tools, wasting valuable time, money, and significant opportunities. And ARM5 Formula AI solves this critical challenge by acting as an integrated team of smart, always-on digital agents. It seamlessly works 24/7 across every facet of your business, from strategic planning and targeted marketing to robust customer retention strategies, automating complex tasks that previously required entire human teams. And with agentic AI forecasted for explosive growth, projected to surge from 8.5 billion in 2026 to over 35 billion by 2030, companies that integrate these intelligent systems early will gain an insurmountable edge in efficiency, profitability, and market valuation. And this is the initial AI agent system that we have planned for RM5 Formula AI. And I've made this slide personally to make it very easy for anybody to understand, to not get too technical. So let me explain. Strategic planning, this AI agent helps you plan for growth by finding new opportunities. It's just constantly analyzing your business, giving you a report, basically being a strategist and a coach to help you guide your business. And it can also just take action and communicate with the other AI agents. And then the supply chain AI agent manages your products. It keeps your shelves stocked and saves money on supplies. The paid media AI agent makes your ads work better, spending less to reach more customers and generate more profit. The customer experience AI agent, this one reminds me of my retail days, because the idea with this is to give website visitors a one-to-one experience similar to a brick and mortar store. This way you can boost sales through that one-to-one customer support that is lacking with online shopping. And then the social media AI agent handles all your social media to get more eyes on your brand, to boost sales. The conversion rate optimization AI agent, this is something that I've thought of for a long time, way before AI was even a buzzword. But this is an AI agent that automatically tests and changes your website to make your visitors buy your products. So it's constantly testing, seeing what causes a higher response rate and more purchases. So you get the idea. And then the content marketing AI agent creates content that brings customers to your site from search engines and also from AI. And then finally, the retention marketing AI agent keeps leads and customers coming back with smart personal messages. And these all work together under one hood. And we see that this is going to be the impact of RM5 Formula AI with these AI agents. For one, we know that e-commerce businesses, including our own and also others that use the platform, are going to see at least a 40 to 60% overhead reduction, which is dramatically lowering the operating costs. And that's through intelligent automation and process optimization through the AI agent systems here. Also, you're going to have 24/7 always on optimization. You'll have continuous performance improvement without human limitations or intervention needs. Every e-commerce business using this is going to see revenue and profit growth, because it's designed to get better results than a team of humans, because it's, I hate to say it, but AI is smarter than us and is always working and never sleeps, never takes any time off, never eats, never gets sick. And on top of that, it's much more cost effective. So it's going to reduce costs as well. And then finally, I anticipate that any e-com business using this is going to see between a 2x to 4x valuation boost, because they're going to become more profitable and they're going to be also growing at a faster rate, which makes it an even more valuable business. So that's why we anticipate that happening. And the current agentic AI software competition, it's strong, but the market is still early. Here are some competitors, as you can see here on the right, that are offering different AI agent systems. And I'll explain, how RM5 Formula AI kind of stacks against these. So right now we're in the first major adoption cycle for agentic AI. So it's still really, really young, which is great. And the current leaders, they offer individual slices of automation. For example, some of these softwares, they offer marketing and retention. They specialize in automated campaigns and customer engagement. For example, Bloomreach is one of them. And then you've got paid media and attribution, which focuses on optimizing ad spend, advertising online, and tracking performance. And Triple Whale, for example, offers that specifically. And then you also have supply chain and operations, which manages product flow, inventory, and operational efficiencies. Questera is an example of that. So no single platform offers a full multi-agent system capable of managing an entire e-commerce business end to end. This fragmentation highlights a significant market gap. And this is why timing matters. Right now is the window, 2025 to 2027, 2026. It's going to be crazy in 2026. And we're entering into a once in a generation wave of agentic AI adoption, as I told you early on in today's presentation, where brands that integrate AI early will capture a permanent competitive advantage. And here are some industry predictions that highlight this urgent opportunity. For example, the Gartner forecast says that by 2028, up to 33% of enterprise software apps will include agentic AI capabilities. Deloitte's projection says that the agentic AI market will reach 35 billion or more by 2030, with rapid growth accelerating significantly from next year, 2026. And then IDC's outlook says that 45% of organizations are projected to deploy autonomous agents at scale by 2030. So we're in the middle of a market sweet spot right now. It's still young, very early market, still young enough to allow new category leaders to emerge and innovate. Also, there's mature demand right now. There's enough demand with strong enterprises getting into agentic AI softwares and adopting it because they know how important it is for them. And the tech has matured enough where it has an impact. And so business owners are not shy now to embrace it and to integrate it into their business operations. And we're also in the middle of an inflection point where we're positioned at the critical moment where adoption is about to explode exponentially. As I mentioned, 2026 is anticipated to generate a ton of momentum when it comes to agentic AI being used across all businesses. Okay, so ARM5 Formula AI is entering precisely as this wave breaks, not after. And this strategic timing allows us to build first mover advantage in a segment where no complete end-to-end system currently exists. And so just in summary, here's the competition versus ARM5 Formula AI. So the competition offers tools, but the ARM5 Formula AI offers an entire AI workforce. So competitors, they do one function extremely well: ads, retention, conversion rate optimization, personalization, analytics, or inventory. They require multiple tools stitched together. They have no unified strategic brain connecting marketing, supply chain, and growth. And they lack vertical integration with an e-commerce portfolio. Whereas ARM5 Formula AI has all 8 major functions required to scale an e-commerce brand under one hood across marketing, operations, supply chain, customer experience, content, and retention. And it's using autonomous agents that plan, decide, and execute 24/7. And it's with unified data, one dashboard, and one AI brain driving the whole thing. And on top of that, too, we have our own e-com brand. So this software is going to be proven, it's going to be tested, it's going to be tuned to our own e-com brands as well. And that's something that a lot of competition, they don't have. They don't have companies that they own, that they can test in. Okay. So where competitors automate tasks, ARM5 Formula AI automates the entire business. And this is why ARM5 Formula AI is positioned to become the category defining player in the fastest growing segment of the AI economy. And it's truly a market ripe right now for a category leader. As I showed you with all these other agentic AI softwares, they're all siloed, just doing individual functions or maybe a few, but they're not running an entire e-com business. So this is a ripe opportunity right now. And analysts that forecast the agentic AI market, they expect it to grow from 8.5 billion in 2026 to more than 35 to 50 billion by 2030. This is a compound annual growth rate of 40% to 47% across the decade. We talked about e-commerce. E-commerce was around, I believe, 19% earlier in the presentation. This trumps that by double. And that just shows you that agentic AI right now is a growing market, and it's a market that you want to participate in before it's too late. Okay, so overall, in summary, we've got a market position here, and we've got a competitive advantage. We've got the first mover advantage. Few platforms today offer true agentic automation. ARM5 launches into a young yet rapidly expanding market with limited established competition. We also have deep technical expertise. Our founders bring over a decade of artificial intelligence and software experience and e-commerce experience, having delivered enterprise solutions at scale for Fortune 500 companies. We also have a strategic partnership with a very proven, very tested set of owners at xngen.ai. This is a collaboration with xngen.ai. And we've already done the blueprint with them, and they provide access to robust infrastructure, research talent, and a ready pipeline of early adopter clients for us to hit the ground running. And on top of that, we have an ROI-focused design. We design agents to solve high-value problems like customer support, sales automation, and operations, ensuring measurable business impact from day one. So the current raise we have is at 125,000. Very small round, very small raise. And this is using a Reg D filed with the SEC. You can go to the SEC's website, the Edgar database, type in ARM5, you can see it there. And also on WeFunder, that's the Reg CF, and that allows us to invite non-accredited investors to invest in this as well. And it's also at a 13 million pre-money valuation to fuel our strategic expansion with ARM5 Formula AI. So overall, this is how the money is going to be invested. 100,000 of it will go directly into software development to realize the vision of ARM5 Formula AI. And then about 25,000 will go towards the marketing launch to drive initial adoption and also momentum. And here is the path to 6x growth by July next year for all new investors that join and are a part of this company and this round. Unlike most early stage AI investments that lock up capital for years, ARM5 Formula AI provides immediate returns through monthly profit distributions starting by March 2026, and your capital begins working for you immediately. Okay, so step one, you invest and you get equity in this project. You get somewhere in between 4 to 20% equity, depending on your level of investment. And then after that, we build the software, we finish it, we launch it, we have a strong marketing plan, strong marketing launch. And then by February 1st next year, the whole platform, it goes live. Then right after that, you earn monthly profit distributions. So you get a monthly profit share. And it's estimated to be between March and May of next year. So during those months, March, April, May, maybe even June, you'll get profit share payments every single month reflecting previous month's performance on profit. And then at that point in time, towards the end of that period, we'll give you the opportunity to convert your investment into pre-public shares of ARM5 Formula Company, the parent company of ARM5 Formula AI. And we're going to allow you to do it, though, at today's 13 million pre-money, not tomorrow's valuation, which is expected to be somewhere between 20 to 40 million. Okay, so you're getting a more favorable conversion. This way you can get your money to work harder for you when we do a direct listing and go public. And then, as I mentioned before, we're aiming to take the overall company, all companies, including ARM5 Formula AI, onto the NASDAQ by July 1st next year. And so you'll have shares of a public company before we list, and then you'll get public shares. And those are shares that you can trade, you can sell, but there will be a 6-month lockout, so you won't be able to sell them right away because we don't want everybody dumping their stock, and then obviously the value of the stock goes down and people lose their money. We don't want that for anybody. So there's going to be a 6-month lockout where pre-public investors cannot sell any of their shares. But then 6 months after, we're going to open it up where you can apply to sell some of your shares. And the idea is we'll let you get back your original investment and let the profit ride long term. Okay. So this is exactly how up to 5 equity investors in ARM5 Formula AI can turn a $25,000 stake, that's the minimum investment, into potentially $150,000 or more in value by July next year. And that's through the monthly profit share distributions and also the early stage equity conversion into ARM5 and the participation in our NASDAQ listing strategy. Okay. So for example, a $25,000 investment receiving 4% of net profits is projected to earn $2,000 to $10,000 per month starting February to March next year based on projections. And as our Agentic AI software scales, this passive income increases proportionally, all while your equity appreciates towards the public exit event. We've done the projections. We're happy to share this entire report with you or dive into it on a Zoom meeting. We'll share anything and everything. But here are the projections, as you can see, from February next year until August next year. There could be even more explosive growth towards the end of this period because we'll be public by July. So we'll have access to a lot of resources that we could pour into ARM5 Formula AI to grow it and scale it even further. So overall, step one, you've got an initial investment. A new investor joins ARM5 Formula AI with a minimum $25,000 allocation, becoming a key part of our growth trajectory. And then each investor receives up to 20% of the net profits monthly, and that's based on their investment. It's 4% basically per 25,000. And then after that, you then have monthly deposits. So we wire you monthly profit share, and that's projected to continue from approximately February until May next year. Okay, so you'll have a steady and predictable passive cash flow coming into your account from this investment. And then step two, as I mentioned, you'll convert into ARM5 shares before the NASDAQ listing. And you can see good, better, best projections here. And this is all based on research, which we're happy to share with you all the research we've done on this. But because of the type of company we are, being an e-com aggregator, and because we're also investing into an agentic AI software and adding that to our business, which gives us a competitive differentiator and makes us even more valuable, it means that we'll be able to get somewhere in between, according to research, at 8x to 20x of our revenue. And that's going to dictate how much the shares are worth. Okay. And that's what you can see here. So a $25,000 investment by July 1st next year should be worth somewhere in between $53,000 to $132,000. And this doesn't count the profit share payments you've received in the previous few months as well. Okay. And that's how it's possible for you to get a 6x plus on this investment. Okay. So to summarize, you can lock in today's price before tomorrow's valuation. You're getting an early conversion advantage when we convert you into ARM5 shares at today's pre-money 13 million pre-money valuation instead of next year's valuation. And in May to June next year is when we'll convert you into shares of ARM5, and it'll be locked at that 13 million, not the future valuation. And the foundational share price, the shares are going to be worth $1.30 right now, but in the future, they're going to be worth a lot more. And so next year, when we go public, the shares could be worth anywhere between 8 to 12 or more maybe per share. Okay. So that's how you can gain a lot on your hard-earned capital in this investment opportunity because of our path to take our company public. Okay. And so we're taking our company public, targeting July next year, aiming for an 80 to 120 million or more valuation. And there'll be a 6-month lockout period. And then after that, you can then apply to sell some of your shares. The idea is we want to let you get your original investment back, let your profit ride, or you can keep it all in there. It's totally up to you. And then we'll continue to grow the company, drive it to our vision, which is $1 billion market cap, which means that the shares at some point could be worth $100 per share or more. Okay. So if you hold on to those shares for a long time, you could really see a very, very significant ROI for your hard-earned capital. Okay. And as I mentioned, this is research backed. We've done a lot of research before we made these decisions to pour our energy, our time, our money into ARM5 Formula AI. So these valuation targets are not hyped. They're literally modeled from real software and AI market multiples and performance expectations. For example, here are some key market benchmarks. This is 2025 data, so it's very recent. Public software companies typically get a 6x of their revenue. Private software M&A gets somewhere around 4.8x. And then AI companies fetch between 15 to 24x of their revenue multiples due to high growth and data moats. And so the ARM5 projection, as you can see here on the bottom, this is the July 2026 go public scenario. This is all a combination of going public, having an e-com aggregator doing at least 10 million, which we're on track to do by the end of January, having ARM5 Formula AI developed with a small customer base. That's it. Okay. And that should get us in between. I'm going to start with the moderate 8x or up to 20x, which means that the company should be worth 80 million to 200 million when we register and go public, which means that the shares that you have could be worth $8 to $20 per share. Okay. Okay. So This is an opportunity for you to join us in transforming e-commerce with Agentic AI. This opportunity combines everything sophisticated investors seek: explosive market growth, first mover advantage, immediate cash flow opportunities, and clear exit strategy in the $320 billion Agentic AI revolution. So a few things to summarize here. You've got explosive market growth. There's a $320 billion Agentic AI market by 2030 with a crazy 85% annual growth rate projected. And e-commerce businesses desperately need AI that can actually do tasks, not just chat. And we're positioned at the center of this transformation. Also, we have first mover advantage. While competitors offer single function tools, ARM5 Formula AI provides a complete AI workforce. Early market timing allows us to capture category leadership before giants enter. We have opportunities for you to have immediate cash flow. Unlike typical AI investments, you earn monthly profit distributions starting February to March next year. You get up to 20% of the profits every month based on your investment. There's going to be up to 5 equity holders that are going to be allowed into this opportunity. You have a proven team and vision led by myself with a proven track record. We have a clear roadmap from launch to $1 billion market cap by 2029. We have a pre-NASDAQ listing strategy, which creates multiple liquidity opportunities. We also have a strategic portfolio synergy. ARM5 Formula Company's existing e-commerce portfolio provides immediate customer base and operational expertise and built-in distribution channels for accelerated growth as well. And as you know, we have a clear exit strategy. We have a NASDAQ listing targeted for 2026. We have a commitment with directipo.com to make that happen, which creates a liquidity event. There's going to be multiple exit options, which includes a strategic acquisition by tech giants seeking AI capabilities, or we could just hold it and just continue to grow the company and create more value in all the shares. We'll have lots of different opportunities to consider. So most importantly, timing does matter. You're investing at the perfect inflection point, early enough for maximum upside, late enough that the technology actually works. This isn't something that's not tested at this point. This is something that works. And this is precisely when smart money deploys capital for generational returns in the AI revolution. There's a few terms and bonuses here. For one, in every single investment agreement, there's a 2x ROI guarantee, which means that you're guaranteed to double your money in the next 3 years or less in every single agreement, or your money is returned. Also, we do offer 2 bonuses right now to sweeten the deal and to get you to take action to help us get this out and take advantage of this exciting time and this exciting opportunity. So any investments up to $99,000 will get a 10% investment bonus, which means that if you invest, let's just say $50,000, you'll be credited $55,000 on the investment, and that will give you extra ROI opportunities. And then if you invest $100,000 or more, and again, there's only $125,000 in this round, then you'll get a 20% bonus. So for example, if you're an investor that contributes $100,000, you'll effectively secure a $120,000 equity position. So you'll get a little bit more than 20% of the profits every month. And then when we convert you, we'll convert you at $120,000, not $100,000, into pre-public shares of ARM5 Formula Company. And again, at today's 13 million pre-money valuation, not tomorrow's much larger valuation. Okay. So if you're interested in reserving an allocation, again, there's only 125,000 available. I only anticipate there being maybe up to 4 to 5 people that will be a part of this round. It's a very exciting opportunity. So I highly recommend you take advantage of this right away. Again, as I mentioned before, this is a once in a lifetime, once in a century transformative technology that's going to transform everything. And e-commerce is booming. It's going nowhere. It's continuing to grow. It's expected to grow over the next several years. Agentic AI is going to be a big part of that. We're building the infrastructure of e-commerce in the future to make it easier for e-commerce businesses to grow and scale and do it very lean. So I highly recommend, if this is something you want to take advantage of, scan this QR code, get a time on my calendar, even this week, even though it's Thanksgiving. It's fine. I've got some time available. There's also some time available next week as well. But it's first come, first serve. So, I highly recommend that you book soon as you can. Otherwise, you're not going to see this again, and then you'll wish that you did invest in this because it's going to take off. So scan this QR code or go to arm5formula.com/call to schedule your consultation with me personally. And we'll dive into this. I'll answer any questions you have. I'll share any data that you want to see. And then if it's a good mutual fit, then I'll invite you to be a part of this round as well. So with that said, I'm going to stop talking. I'm going to get some of my water over here. I'm going to address any questions you guys have. So let me know what questions you have. Go into the comments wherever you're joining me from and type in your questions, and I'll go through them one by one. Okay, so first question came in from Tan. Thank you, Tan, for the question, and thank you for being here. The question is, how much is the minimum investment? The minimum investment, Tan, is $25,000. So thank you for the question. All right, don't be shy, guys. Throw your questions in the comments. No matter where you're joining me from, I can see your questions and I can answer them. All right, don't be shy. What is the time frame to get in this round? Thank you, Paul, for the question. Like I said, Paul, it's first come, first serve. We don't anticipate it being open for more than 2 weeks max. I think that this will fill by the week after Thanksgiving, so next week, by the end of the week. So I anticipate by that Friday, that first Friday of December, is when this will be 100% closed, if not sooner. So it's first come, first serve. One person could come in, snatch up all the equity, invest $125,000, and then it'll be done. It could be that quick, or it could be 5 people invest $25,000. So it just depends on how fast people move on this. And we already have a lot of demand, a lot of interest. We've had some book calls already. We have some people making final decisions. So some of these spots are probably going to be taken in the next few days, but I don't see it filling up this week based on the conversations I've had. But by next week, I definitely see it filling up. So thank you for the question, Paul. Appreciate it. All right, what other questions do you guys have? Let me know in the comments. All right. Last call for questions. I'll stay on for a few more minutes here. Let me know what questions you have, but it's going to be closed out very, very soon. All right, guys, any last minute questions? Going once? Going twice? All right, guys. Well, that's a wrap. If you're joining me here live, thank you for spending some time with me live. If you're catching the replay, you made a smart decision to watch the replay. The replay is only going to be up for a little bit, And as you just found out, this is a very exciting opportunity with a lot of potential. It's going to move fast. Take action right away. Book a call, get on my calendar, talk to me directly about this before it closes. I hope everybody has a great Thanksgiving week and doesn't get too stuffed. This way you can survive the holiday. But enjoy your week, and I look forward to seeing everybody on the next webinar.